we spoke last week about how August has been pretty typical in terms of the general expectation of how these Northern Hemisphere holiday periods typically pan out. And that was certainly the case last week, although we saw a little bit of potential at the beginning of the week. But then through the course of last week to the end, there was quite a bit of action that started kicking in. But it also seemed to largely fizzle out on Friday. So once again, August not being a friendly month for us, we've been able to hold our own in terms of overall profitability. We haven't lost anything, but we haven't really made anything through the course of the month either. But we're still trading, we're still keeping on going, and this being the last complete week for the month of August, there is definitely still potential across some of the markets that we're trading. So let's have a look at what happened last week, as well as what we're looking at for the week to come. All right, here we're starting off with the Euro-US dollar on the weekly time frame, where we finally had that bearish break and close outside of the channel here on the weekly time frame. So it's quite borderline, but nevertheless it's there. It did close outside of the channel, which means that we potentially might be looking to start trading this in a bearish direction with our daily core strategy. So there's still quite a lot of movement that would be required for this to become an established trend. So at the moment, remember, this would still only be considered to be a potential trend, but let's wait and see what happens. This is what it looks like on the daily time frame, of course, where you can see that we still have this bearish cyclicity intact, and last week forming another confirmed bearish phase one wave. And as you can see on Friday, we did have that pullback. Now we did get into a bearish H4 impulse on this, which got stopped out for a loss. So it wasn't a successful trade. And that's, I think, late on Friday, it got stopped out, in fact. But you can also see that this morning, it is pulling back inside of the dimensions of what's going to be, our future channel. So if this low gets ringed, that would mean that we'd be updating our technical analysis from an M pattern to a W pattern, meaning that the four-wave channel comes down, or the bottom of the four-wave channel comes down to this point here. So if today's candle closes inside of it again, it would just confirm this, not only, it would confirm it as a weak trend, and that has been the case for quite some time. It would, however, be an established trend, this being the second bearish phase one that we've had outside of that preceding range-bound area. So still not that much happening here on the majors generally, as you will see, except for the Aussie and Kiwi pairs, but it's certainly not been successful for us here on the euro. The pound, even more sort of constrained, if you like. We did get that bearish breakout candle as well last week, also noting that it closed outside of our four-wave channel here on the weekly time frame. And you can see that stronger bearish movement here on the daily time frame, giving us a valid class 1 M pattern as well through the course of last week. So those of you who are trading the WM patterns on the selection time frame, that certainly did give a nice setup for a short. And not only in terms of the H4 impulse, but we also did get a nice hybrid short. And if you're just using the, if you're using your the trailing stop on this, and remember with a hybrid we use the 3-6 method, then you would have been kicked out of that. If you were just going for the target, you'll still be in this trade. But nevertheless, I think generally most of us are using the trailing stop. We got kicked out of it over there for just over 2 to 1. But that was immediately followed up by the bearish H4 impulse, which obviously was successful. So for those of us who like to look out for those WM patterns, that was, certainly the cable gave us some nice trades there with our core strategies. Here on dollar yen, you can see last week's weekly candle just being, a spinning top basically, so no real development for us. It did ring the preceding high, but just really showing that this is still very much a sideways market on the weekly time frame, and obviously also on the daily time frame as well. You can see it's just meandering around this 55 EMA on the daily time frame. So nothing of interest for us really there on the dollar yen. So dollar Swiss, similarly, you can see here on the weekly time frame, very, very flat. And likewise here on daily as well. So ever since we had that false breakout, really there's been nothing for us to look at on this at all. USD CAD weekly time frame, you can see last week, and we'll obviously notice this across the Canadian dollar pairs, we had a very strong bullish movement here where it came up and tested the top of our four-wave channel, and obviously failed to close outside of that, so it failed to break out of it so far. Obviously, it's still very early in the week. We need to wait and see if the market is able to continue this bullish move and break outside of that channel, in which case there's obviously potential for us to start trading this in a bullish direction. And that's what it looks like on the daily time frame. You can see we just managed to get a breakout on Thursday. Thursday's close outside of our channel here on the daily time frame. But then Friday, nothing happened with that. Just having a look at that on the H4 time frame, we were looking to get into an H4 impulse on this, but we actually didn't have any kind of a pullback to allow us to do that. And then, of course, in the latter part of Friday, it just turned around and came straight back down again. So weren't able to trade that at all, and probably just as well. Bit of a pity, but anyway, we've got other pairs that are much more attractive than that in terms of the conditions, and the Aussie pairs certainly have continued to be the feature for us. So as you can see here, let me just go to weekly first. On the weekly time frame, we spoke about this last week with the preceding high being ringed with the week before's candle, and I mentioned that there was obviously that was meant that we could start looking to trade this in a bearish direction with the daily impulse. And you know, if you were able to jump in anywhere over here on a daily impulse, then great. I didn't get in on the daily impulse because I like to wait for that pullback, and we didn't actually get one. So that being Monday's candle over there, you could see it just carried on straight down. But certainly we got plenty to work with here with the H4 impulse. I'm only noticing the one here that we took. There was another setup, and I'm pretty sure we took this one as well, but this one wasn't successful. So using our 3-6 trading stop, we weren't quite able to get to break even on this either. One thing I can say though is that we did get into a bullish overlay on this pair this morning, and you can see the perfect W pattern setup with the first 4-hour candle this morning giving us that impulse that we needed to go long on this, and currently in the second 4-hour candle of that trade. So so far that's doing okay, and should be able to recoup the small loss that we've made on that second H4 impulse. But certainly the first one was successful, and if you were using the advanced targeting on this, you would have scooped a bit more than what is showing over here with the standard targeting. So Aussie certainly being, and Kiwi, as you'll see as well, being something that we could trade across many of the crosses as well. Here on the New Zealand dollar, this is obviously the major, the Kiwi US dollar. You can see how at long last we got this bearish breakout, and we've spoken about the Kiwi for a while, just noting that there was very little for us to do across any of the Kiwi pairs. But that certainly changed last week with this bearish breakout. So that giving us now the opportunity to start looking at this for daily impulse trades, and needing to have a pullback, which looks like we may well be getting today, and maybe through the next couple of days, and then looking for that bearish impulse candle to help us get short on this. So that was great as well. And in terms of the H4 impulse, you see we on Wednesdays we got that close outside of the channel. So started looking at this for H4 impulse on Thursday already. So I'm not seeing any, I didn't do any analysis on it here. But if we just work that back, it would have been on the 19th, so not the 18th. Doesn't look like we actually, in fact, the only setup we got was at the open of the market on Thursday morning. So if you had traded this with a bearish H4 impulse, you would have entered right there, and that would have been it. There was a second option over here as well, as you can see, but clearly that one didn't work out. So the first one, again, similar to the Aussie, we see one worked, one didn't. But the difference being here as well is that if you were going for the overlay setup was in fact on Friday evening. So I didn't take any trades on Friday evening, but that was in fact the bullish overlay setup for Friday evening. So yeah, there hasn't been anything else since then. Okay, so moving on to our yen crosses, euro yen last week, you see we had that nice bearish impulse candle giving us a bearish impulse wave as well here on the weekly time frame. Now, of course, we are still very much inside of the current channel dimensions, bearing in mind that, you know, when this analysis moves on to the next W pattern, then this is going to be the base of our future HDC channel. In which case, at the moment, that would in fact count as a breakout of that future channel. Now, it would also show this as being potentially valid class 1M pattern when that eventually happens. But right, that's still some time in the future, obviously, so we don't need to worry too much about that. But that doesn't mean that I'm actually trading this on a daily time frame. I haven't been, not at all. But when it comes to trading the lower time frame, certainly we had that bearish breakout here on daily below our the channel boundary, and that would have been Tuesday, Wednesday, that would have been Monday. So from Tuesday we looked to short this on H4 impulses, and it didn't work out that well for us. I think we got, yeah, so we got the one winner over here, but we also had a setup to go long on an overlay, which actually got kicked out immediately. So that kind of took away some of the profit that we had on the H4 impulse. And likewise, I think this was also a valid H4 impulse that, not H4 impulse, beg your pardon, overlay, that didn't work out. So this was not a profitable pair for us last week, no question about that. But we did obviously also get that hybrid that we were talking about previously. If you'd taken that, then that did hit take profit. But yeah, that trade is from the previous week, obviously. So overall, though, you can see how, in terms of what I mentioned at the beginning of this discussion, how on Friday everything really just turned around again. So a similar kind of experience to what happened 2 weeks prior with the non-farm payroll, where things were going quite well in the first week of this month. Then we had non-farms, and everything just spun around and stopped us out of our trades in that first week. 2 weeks later, it's almost exactly the same thing happening, and just for different reasons, obviously. Not that we care about what those reasons are. Right, GBP yen here on weekly, still very much inside of the channel, but last week also quite a strong bearish impulse. But likewise, you can see, although this is only happening today, we've now got a retracement coming back in a bullish direction. Haven't been trading this. It's not a valid WM pattern for anything, but keeping our eye on it for future reference. Never know what's going to happen here. Swiss yen, likewise, stuck inside of that channel. I haven't touched this for a while, so not interested in that on either of our selection timeframes. CAD yen, you can see, well, let me just look at weekly quickly before we talk about daily. Another one of those bearish impulse candles showing that yen strength through the course of last week. Testing the support level, didn't break it, as you can see, just bounced off of that level. And looking at this on the daily time frame, you can see same thing here. came down, bounced off of it on Friday, then it's coming straight back up again. If you were trading WM patterns on this, obviously we did get a valid M pattern on this on, well, certainly the open of Thursday, but did we get any? Yeah, okay, so this was the first real setup to short this, unless you were trading a hybrid and prepared to look at class 4 M patterns. This was a class 4 M pattern. I don't generally, if I'm trading the hybrid, I look at classes 1, 2, and 3. And generally, it's only going to be the class 3 for most of the time for a hybrid. 1 and 2 generally being apparent when the H4 impulse comes along. But yeah, the next setup candle was this extended bearish candle, and I just generally stay away from those. If you've got a setup candle that's way outside of the typical ATR for the pair in the time frame, I'm not going to take it. I'll have a quick sip of coffee here. Right, so the last of our yen crosses, you can see here again, the Aussie featuring strongly. Last week's candle ringed that previous high. So looking at this on daily, we did speak about this before. We didn't get that setup. Well, that previous setup we had, we spoke about how that got stopped out the preceding week. But what we did not get here is a valid setup for a hybrid, only because we got a higher close over here, which I think I did mention in our call last week, Monday. But this also making this a class 4 M pattern. So had that close been inside this wave's price territory instead of outside, would have been an inside C close, there would have been a class 3 pattern, and that would have been a perfect short on a hybrid here on this pair. Didn't happen, unfortunately, and that's just the way it goes. So in hindsight, it's not nice to miss out on these nice trades, but that's the way it happened this time. What we did obviously get though is the breakout through the course of last week, that I think was Tuesday, at the close of Tuesday, meaning that we could start looking for our H4 impulse trades from Wednesday, and there you can see we had a nice one. So technically speaking, this is also a hybrid rather than an H4 impulse, but you would have taken it either way. If you're just trading H4 impulses, you would have certainly spotted that setup and taken this one, which obviously was quite a nice, easy winner. So that was pretty much that. I think this was not a valid setup because using our pullback rules, looking back 3 candles, that pullback candle fell outside of the valid time frame that we looked back for a pullback. Also have now this morning had a valid setup for an overlay. So if you have been keeping an eye out for that, here's the breakdown of sequentiality of cyclicity. There's the final requirement with that bullish impulse. And you should be long on this already for an overlay, and looks like it's doing pretty well. Kiwi getting here also at long last. Kiwi breaking out of a channel here on the weekly time frame. And looking like this on daily. So we haven't yet had the opportunity to look for a daily impulse on this, but should we, well, we're obviously getting a pullback at the moment, so there is definitely potential for us to short this on a daily impulse, should our final selection criteria get met. Again, we did have the breakout of the channel here on daily, which means that for the first time on Friday, in fact, we were able to look for a short on this, Friday's date being the 20th, and that would have been, yeah, so this was actually the last 4-hour candle of Thursday. So this was a valid setup, but as you can see, this is another one that didn't work out. So just to make it clear, we would have entered at the open of that candle, stop above that high. I'm sure that's inside of our ATR stop requirement. And 1, 2, 3, 4, 5, 6 would have been stopped out actually this morning on this at around this level here. But at the same time, again, here you have, or we had, in fact, with this candle, a valid setup to go long for an overlay. So I'm just going to This is my So that would have been an overlay. So that may well be getting to the point. We would have probably taken a profit on that. Yeah, so we would have probably taken a small profit on that in the preceding 4-hour candle. So if you hadn't done that, then it looks like it would have just hit take profit around about now. So although we should be using ATR on that, so that's not quite right, 39 pips. Let's have a look where that is. Oh, there we go. So using your ATR target, it would be a little bit further than that. But also remember, with the overlay, we bring our targets closer when we trail the stop, which you would have done this morning. So yes, definitely out of this one for a small winner, and would have recouped some of the loss on that preceding H4 impulse, which of course is the entire purpose of the overlay. Okay, so moving into our Euro crosses, we finally had that support level properly respected here on Euro GBP with a strong bullish impulse candle, very much still inside of our 4-wave channel. Didn't get a valid W pattern here, still inside of the channel on the, I'm just wondering, I'm pretty sure that I saw a trade trigger on this one this morning. So if you're taking, as you should, in fact. There we go. No wonder this analysis is not correct. There we go. So that's the 4-wave channel. Even Friday already, you would have been able to look for a bullish H4 impulse on this, because on Thursday we had the close outside of that. So I'm pretty sure we're in an H4 impulse on this as we speak. So just going a little bit sideways this morning, but if you hadn't hit your take profit yet, you should certainly be at break even on that. Euro Swiss, as you know, I don't trade it, but we are definitely an established bearish trend here on Euro Swiss franc. Last week, ringing that preceding week's high, so into a technical bearish impulse wave. It's not yet confirmed, obviously, as we don't yet have that lower low, lower close. So if you were looking to trade this, well, just coming back to this, remember, last week we were still looking at this as a phase 2 of this trend, which means that the only thing you'd be looking to trade this as using our multi-time frame strategies would be with a hybrid. And using that, you would have been able to short this then on, well, the open of, I think that was it Monday? No, actually, 1, 2, 3, 4, 5. Yeah, so actually Monday, and that would have been a valid daily impulse. So not a daily impulse, I beg your pardon, hybrid using the daily time frame. But apart from that, obviously, nothing much to go with over here. If you were trading H4 impulses as well, though, of course, you would have been able to look for those as we were outside of the channel, the 4-wave channel the whole time. Again, I don't like ever jumping into a trade when the setup candle is a long, extended bar, such as we've had here and here. And, you know, very often, although in hindsight over here, you could say, well, it would have worked out fine. Very often, if a lot of the potential high quality price movement has actually worked itself out already, then I don't see the point in looking to get into a trade once that's already happened. So Eurocad, likewise, still here on weekly inside of the channel. Not of particular interest to me in any way, shape or form. We did get that test, again, talking about Canadian dollar pairs, that test of resistance level here. High test candle, and certainly on the lower time frame, you'll see the breakdown in sequentiality of cyclicity. So if you're looking to trade overlays on at the end of any phase 1, certainly those coming to an end at a channel boundary. Technically, it's not an overlay then, but you could use the same technique. But you'll notice that there hasn't even been a setup here, because it's just a whole string of higher highs all the way to the top, and then a string of lower highs all the way down. So there's not been any breakdown in sequentiality of cyclicity within these long extended moves. So I haven't looked at that, to be honest, not really interested in it. There's much more interesting pairs to look at. Right, let's just look at weekly first here on Euro Aussie. Definitely an established bullish trend, second bullish phase one wave outside of the channel, excuse me. And here we last week had a very strong bullish impulse candle, also giving us that impulse wave. So remember, likewise, if you were looking to trade this last week on the daily time frame, the only thing you'd really be looking at is for a hybrid. And again, here you could see how our pattern here, leading up to that, admittedly it's going a little bit further back, was a class 4 pattern. So if you didn't mind taking that, and I think we spoke about this in last week's call as well, then you would have gone long at the close of this candle here, giving us that impulse candle. And obviously through the course of last week, that ended up being quite a nice winner. So if you want to just go check our commentary on that from last week's market review, you will see that we spoke about the setup. So through the course of last week, that did hit the take profit. And if you're using advanced targeting, of course, you would still be in this trade for significantly more locked in profits at the moment. So again, despite the fact that it's August, there has been some interesting market movements, but generally all associated with the Aussie. Euro Kiwi, you could see how it just got to the channel boundary last week, didn't quite manage to close outside of it with our main broker. You'll notice, however, that this morning it opened outside of that channel. Not that that really means anything to us. Let's see what happens. If that continues in a bullish direction and we get the pullback, we could look to start going long with this on the daily impulse. Friday, well, actually Thursday, we actually already got a close outside of our 4-wave channel here on daily. So there may have been potential to go long on Friday, but I don't think there was a single setup to go long for H4 impulse on Friday. No, there wasn't. So, and of course, when you see this kind of sideways movement with these very long wicks and tails and short bodies, then it's just a sign that you really should stay away from. Very poor quality price movement there. Right, so that's the end of our Euro crosses. Let's move on to our GBP crosses. Gbp Swiss, here we had the bearish breakout. We've been constrained inside of this horizontal channel for quite some time. In fact, going all the way back to April. And yeah, so now bullish, bearish breakout here and looking to take advantage of that. If you're waiting for a daily impulse, that's great, but you will need to wait for that pullback before anything else happens. Friday obviously gave us that outside close here as well. So if you were looking for an H4 impulse, then in 29 minutes time is probably going to be your opportunity to short this market using an H4 impulse. So we also did have a bullish overlay over here, which if you had taken that, I think is, it wouldn't be stopped out yet, or it might be pretty close to being stopped out because we have that ATR limitation on this. And that's the way it goes. So we would have been stopped out on an overlay. If we get into a bearish H4 impulse and that wins, obviously that would take care of that. So keep an eye on that. Gbp Cad, nothing doing here for us at all. Not interested in all of this. You can see that Canadian dollar test that we had with the Cad weakness on Friday. That's really, there's nothing for us to do there. Gbp Aussie here again, more Australian dollar action. So here we have the weekly time frame. 2 inside bars over here, which really represents a symmetrical triangle, which you can see quite clearly here on daily. And we had the breakout of that as well last week. So this is a classic hybrid with a class 3 W pattern impulse candle on the 16th, which was Monday. So open of business on Tuesday, we went long on this and hasn't hit take profit. If you're going for the deep targets, as we like to do with our hybrids, still some way to go. And almost at a point though, if you want to trail the stop, we'd be able to start trailing the stop on this. But let's wait and see what happens there. looks like we are getting a bit of a pullback now, which means that if we gets followed up by a bullish impulse candle, then that's also set up for a daily impulse. Likewise for H4, so looking at this briefly, we did get an H4 impulse set up on Friday. That obviously has not worked out. We didn't get a confirmed bullish phase one wave here, which means it was a setup for a bearish overlay, which, as you can see, it's actually got to the original take profit level. But because of the way we managed the trades, I think we would have exited this trade for not as much of a profit as that. And of course, the bullish H4 impulse is a loser. So using that trading stop, 1, 2, 3, 4, 5, 6. Yeah, it would have been stopped out for not much less than the original risk. But having scooped back some of that on the overlay in any case. If you are looking to go, as you should, apart from an overlay, for a core strategy to go long on this again, now you're looking for a bullish hybrid on H4. So do keep an eye out for a class 3 W pattern here. Gbb New Zealand Dollar. This one hasn't broken out of the channel. So we've had Kiwi breakout of some of the channels, but not on this one. So it tested that resistance level, but respected it. And here again, you can see on daily how well it's respecting the resistance level at the top of our channel boundary, at least for now. If you are looking for a valid W pattern, of course, that you may well be getting if you wanted to trade that on the H4 impulse. Just noting as well that we did get that set up on Friday for a bearish overlay. I don't think this one has gone anywhere. So yeah, this would probably have been stopped out for a small loss on this overlay. But if you're looking for that class 3 W pattern to go long on this again, hasn't happened yet, but keep an eye out. We may well get that. Right, so moving on to our other crosses, Cad Swiss Weekly, another one where we've got this bearish trend and that breakout last week with that strong bearish impulse candle, also giving us a bearish impulse wave. So looking for a pullback to be able to potentially short this on a daily impulse, may well be getting that as we speak. Also may well be getting a valid M pattern setting up here to short this for H4. Currently in a phase 2 of this bearish trend on the H4 timeframe, and it's not showing any breakdown of cyclicity as yet on this. So something to look out for though. Aussie Swiss, again, Aussie action, that's obviously on daily, just quickly looking at weekly here. Valid M pattern as well, strong trend, very strongly trending across all of these Aussie pairs in a bearish direction here. Last week giving us lots of potential to trade this with the H4 impulse. You'll see there's the bottom of our 4-wave channel. And I noticed that we did actually also have a losing overlay here as well, and followed immediately by a very quick winner on H4 impulse. If you'd been looking to short it again with a standard take after having hit a standard take profit there, we didn't get that again because of our pullback rules. So remember, we look at the last 3 candles. We need to have a valid pullback candle, or at least 2 others that add up to a valid pullback. We didn't get that. That's the only pullback candle we had, and it didn't fall into the correct number of candles. So we didn't short that, and just as well. That's been followed up by, again this morning, if you wanted to look to trade a bullish overlay with a valid W pattern and the final impulse selection criteria being met at the end of, well, at 4 a.m. broker time this morning. Hasn't done that much, but at the moment hanging around the break-even level. But should this not actually resolve itself in the next 22 minutes, we'll be trailing the stop to below the low of this candle here and bringing our take profit in tighter as well, as we do with our overlay rules. Aussie Cad, valid M pattern here. So bearing in mind that this retracement, this bullish retracement we had previously, as we've already discussed in previous sessions, respected that resistance level. The previous week, we just had that inside bar, but nevertheless, all still valid for us to potentially look to short this. So on the daily time frame, if you were ready for it, then you had a setup to short this for a daily impulse last week, Tuesday, I think that was, yeah. So Tuesday, and you would still be in this trade if you're following the 2-5-step rule. So we did have that pullback on Friday, but your stock would still be safe over there. So do just keep following that up, but a valid daily impulse from last week, most certainly, if you are just looking at those criteria. It was also, if you look at this, with that bearish close over there, a class 1 M pattern. So if you're trading just WM patterns, then not only that, but also this morning, it would be potentially a valid setup to look to short this with a hybrid on H4. And you'll notice how we had that strong breakdown in cyclicity here with phase 1, phase 1, phase 2, phase 1. So yeah, it's definitely another phase 1 cyclicity breakdown. So there's quite strong price movement taking place at the moment. But we still need to have a pullback followed by another bearish impulse candle before we'd be able to short this. So there's nothing for us to do as yet, but certainly showing plenty of potential. Again, an Aussie pair. So that seems to be where all the action has been, which means that you need to also be careful about your correlation risk. Here on Aussie Kiwi, so had some funny price movement last week. Just noting, first of all, on weekly, is that we're still very much outside of that channel, but we did get a couple of tests which came back up to this resistance level, which looks like this on daily. So over 3 days, in fact. So what was that? Tuesday, Wednesday, Thursday. All 3 of those days gave these strong bullish pushes before rolling over and coming down again. What that does mean is that previous bearish daily impulse that we were in did get stopped out, and that's just life. So that was the end of that. I don't think I've done anything else on this one, because certainly, in terms of the correlation risk, I've used up all of my capacity for the Australian dollar. Kiwi Swiss, we had that weak trend from before, but last week gave us a strong bearish impulse candle and impulse wave with that lower low, lower close, closing again outside of the channel. So another one where we can drop down to daily and start waiting for a pullback and a bearish impulse candle to short this for a daily impulse. We did get a couple of H4 impulse setups last week. Also an overlay. So you'll see this picture across quite a lot of the pairs that we traded last week, where we got an impulse and an overlay together, the one winning and the other losing. In this case, we actually had a bearish H4 impulse that hit take profit. But I know that a couple of people missed that first one and then went for the second one. Either way, you would have managed to scoop a winner on this for an H4 impulse. But if you were trading H4 impulse plus the overlay, we would have given up some of that profits on the overlay. And that's just the way that cookie crumbled. Right, final currency pair, Kiwi Cad. So still very flat here on weekly and likewise on daily. Nothing of interest really for us. Almost got it meeting the criteria for a valid M pattern, but managed to close inside of that on Friday, but it did, and that's just the way it is. Plenty of other stuff to trade though, so not particularly worried about that. Gold going very much sideways here, you can see on the daily time frame. So after that flash crash that we had 2 weeks ago, really it's just come back to a similar price level, but continuing now to respect the boundary of that channel. So it's still outside of the channel, but you can see how even though we've had this pullback, there hasn't been a single bearish impulse candle And now we're seeing a breakdown in the sequentiality of cyclicity anyway. So staying away from gold for the meantime. The indices turned around last week. So the ebullient market, bullish markets that we've had across the stock markets, maybe starting to find reason to pause for breath. So you can see that bearish low test candle there on weekly. Looks like this on daily, which is in fact quite a strongly bearish pattern. We've got a phase one breakdown and sequentiality of cyclicity. Currently looking at this as being a pullback. This, by the way, in traditional terms is called a dead cat bounce. So it's the sort of thing that will very often pull someone into the market because they think that it's going to recover again. Now, in the past, it actually did. So where we had these very strong reversal patterns in the last few months, it did actually continue, at least for a time, in a bullish direction. But there's increasing, this is looking increasingly weak, this bullish movement, no question about that. So yeah, just if you do get more bullish setups, that's fine. Just make sure you limit your downside as always, because you don't want to get caught on the wrong side of a major market crash. Not that I'm predicting that, but these are sky high levels. All right, so similar picture here on the S&P. Very, very similar picture, showing the correlation between those markets, obviously. And again, I mentioned this last week. For me, the NASDAQ is a bit of a bellwether instrument and is normally ahead of the others. So if the markets are generally bullish, this is the most bullish. If the markets are bearish, this is the most bearish. So interesting to see what's happening here, that we haven't got any kind of bullish cyclicity. In fact, this resistance level has remained completely intact now for the last few weeks. So yeah, again, I'm not predicting anything, but I'm very interested to see how this all pans out in the week and month to come. All right, folks, so that's it from me for today. Please do remember to hit the like button. You'll be watching this on our YouTube channel. And I'd really appreciate it if you do that and share it as well. So if you've got anyone who you think might get value out of our Monday morning market reviews. But apart from that, that's it for me for now. Look out for our announcements for any trading in the rest of the week. We've got a few things on the boil and looking forward to sharing that with you. All right, guys, have a great week trading. Be careful out there. Bye for now.